Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 27th of August, 2015, and most likely Friday, the 28th as well. Typically don't do market previews for Fridays because they're typically slow, but there's a chance we'll do one tomorrow night. Depends on what Thursday brings. Here's a look at the ES front month futures contract. Got a rebound day. Today we'll look at the intraday action. Gapped up, headed lower, and then sort of reversed higher late in the day. So we'll see what that looks like when we look at it in a minute. But notice that we are still, this is a bear flag formation now. 3 days into the flag itself, we basically stayed inside of the range of the prior session for the most part. So here's the numbers. S&P gained 72.90. When you look at the S&P cash index, it's definitely a bear flag. We trade the entire day inside the prior day's range, if you can believe that. NDX gained 203 points. This one's less of a bear flag because it's trying to eke out to highs here. The resistance point will be just under 4,300 if we get up to there. SOX up just 28 points, which doesn't do much for that index. Biotech's up 173. Still under the 10-day moving average, obviously. Google gained 47 points back into where it's been for the last month or so. Apple also gained almost 6 points to 109, almost 110. But the moving average is still above that, you'll notice. The VIX was down 5.7. So again, we've had the 1 day above 40, and we did close there. That causes a pause sometimes, but we'll see if we get another push lower in the markets. That'll give us a little more of an exhaustion reading on the VIX. We've got crude oil was down today, closing at 38.90. Not a new low close, closed lower on Monday, but still obviously basically at lows for the last umpteenth years. Here's gold futures. Gold dropped finally $13.30. The TRIN got a low reading today of 0.37. It brings the 10-day moving average down a bit. And advanced decliners, 1,600 to the plus side. So it's interesting. You'll notice that we haven't had any days where the advanced decline ratio was plus 2,000 or better on the NASDAQ, but we've had days where it was negative 2,000 and better on the NASDAQ. Here's volume, 2.4 billion again. That's 2 days in a row. Good volume for the week, of course. We had the 3.2, the 2.4, and the 2.4. Remember last week we started the week out with some really bad volume for 2 days at 1.4. So this is volume again, and hopefully, whatever happens here for the rest of this week and next week, then we're post Labor Day, and that's when the markets tend to be fun again. And hopefully, we're going to see some good volume in September and October. And now that we've kind of broken these ranges and created some elasticity and some volatility in the market, we won't just revert back into the junk we were in for the first half plus of 2015. But we'll talk about that a little more in a minute. Let's first go take a look here at the ES in 5-minute candles, if it will load up here for the day. There it is. And so you can see we had gapped up on Tuesday and then sold off hard at the end of the day and closed at the lows. Then we gapped up on Wednesday. We were selling off, and then right in the middle of the day bottomed out, curled back up, broke out of a cup, and closed at the highs. The volume in the afternoon was not nearly as strong as it had been the prior day. And again, the whole day is inside the prior day's action. So that's what helped makes it a bear flag on the chart. And here's a gap that has not filled on the ES, of course, while we're at it. The NQs, on the other hand, look like this. Taking a second for whatever reason today to come up, but the NQs also did not fill their gaps during the session. So what do we have for the rest of the week? Well, first of all, let's talk about the economic data that's due. On Thursday, we've got the second look at GDP for the second quarter of the year. We've got the weekly initial and continuing jobless claims numbers. 30 minutes into the market, we've got pending home sales, and an hour into the market, we've got the natty gas inventories. That's a weekly number. Friday, in case I don't do a preview tomorrow night, we've got personal income and spending before the bell, PCE prices, which is an inflationary gauge, and Michigan sentiment 30 minutes in. That's the final Michigan sentiment number for August. Now, what does next week lead into? Let's just do a quick preview, and we'll focus more on it over the weekend. Monday, we've got the Chicago PMI. Monday is the last day of August, so it's statement printing day. If they're going to try to, have the prices fixed for the end of August to either show less of a loss for the month or to just let it all fall apart and try to recover in September. August is the last day to do that. And then we've got a lot of data next week. We've got ISM index, construction spending, auto and truck sales on Tuesday, MBA mortgage index, ADP employment change, factory orders, crude inventories, Fed base book on Wednesday, challenger job cuts, trade balance, initial and continuing claims, that's the weekly number, ISM services and natty gas, the weekly number on Thursday, and then Friday will be the unemployment rate. But the key is that Friday, September 4th, the reason I'm going through this is next week you're dealing with the end of August on Monday, and then you head into that long 3-day weekend. A couple things, usually people are gone by Friday for the long weekend, and the other thing is, are they going to want to be long, short, or flat going into that long weekend when you got an extra day of whatever happens around the world that you're subject to? This is a U.S. holiday, Labor Day. It's not a global holiday. So it'll be interesting. Traditionally, this is the latest Labor Day can be. It's the 7th of September. It's always the first Monday of September. So we've got some extra time till we get there. Traditionally, it's the second and the third of the month. And then when we come back, we're back from summer breaks for everybody, and volume does start to pick up in the market. September's historically one of the most negative months in the market. We are certainly set up for that potentially, no matter what happens between here and Labor Day. It's kind of irrelevant. But we will see. So again, I continue to say, for those who think, well, this was it. It was a 5-day drop and the bottom's in. I think you're crazy. I think a bear flag on the markets does not look good. Obviously, for the bear flag to trigger, we now have to go crack the lows. And if we do that, I think it's going to be kind of ugly after that. But, we can also just sit here, wrap up the month, get to Labor Day, and then see what September actually brings. Remember, if the bottoms, 9 times out of 10, the market bottoms in the second or third week of October. That's whether you've had a crash or not, a big drop or not. So we're nowhere near that, and obviously we've fired off a warning shot to get people a little bit scared right around the time of year that happens when it happens. So don't be looking at the upside, but play whatever direction at the time the market is giving you. Follow market direction like we always do. Focus on that, and you'll be fine. We've had a great week here, and I hope those of you who have struggled at all, if you're not in our program, I would consider it. I'm pretty sure we can help you out. If you're in our program and you're struggling, you're trying to get used to this volatility, make sure you're asking the right questions about how to do this, because I think these are big money-making opportunity days, a lot better than what we've been seeing, and you have to be taking advantage of it. This is a Tradesight Market Preview. Charts, as usual, brought to you by eSignal. We will be in the lab helping you out. Feel free to take a trial of our services, and have a great trading Thursday and potentially Friday if you don't hear from me tomorrow.